payroll team. Along with that, we are going to look what are the tax saving opportunities available for you, and we are going to also have a discussion of your investment, whatever you have made the investment till 31st of July, from 1st April 2020 to 31st of July 2020, whether you can claim or whether we should declare it in financial year 1920 or 2021. And finally, we are going to have a little bit of demo in ClearTax, using ClearTax portal, so that you can file your tax return in 10 minutes time at max, right? So without further ado, let's get cracking. So first things, we are going to see what are the options available for you to save your taxes. So first and foremost, let's talk about the big guns, right? So the big guns being your ATC deduction and your ATD deductions. Now there are a couple of confusion regarding what is categorized as ATC deduction. Many people know that it is something relating to your life insurance premium, your tax saving FDs and all. However, there are a couple of items that is categorized under ATC that maybe you are incurring those expenses, maybe you are making those tax saving investment, but just because you don't know about them, you are not claiming these amounts in your tax return, thereby you need to pay a little bit more of taxes, right? So we are going to see what are the options available for you to declare under ATC and take the maximum tax benefit for it, right? So the first thing is EPF, that is your employer provident fund. So this part, actually this investment is actually taken care of by your employer at the time of giving your salary. So every month we are getting XYZ amount of salary. From that, a certain percentage of amount is deducted by our employer and it is deposited to PF account that is registered in my name, in our name, and that amount is qualified for claiming deduction under ATC. So EPF, you don't really have to do anything about it. You don't need to do any submission proof submission. Your employer takes care of it and it is reflected squarely in your form 16. So that part is pretty simple enough. Now second thing is your life insurance premium. So if you have taken a term insurance premium from a registered insurance provider, right, and if you are paying a certain sum of premium during the year, then most definitely you can claim the premium paid for this insurance, life insurance. Now in this case, sometimes we are under the confusion whether we need to include this amount exclusive of GST or inclusive of GST, because if you are paying LIC premium, life insurance premium, you are liable to pay GST. Now to sort out this confusion once and for all, you should claim the amount inclusive of GST. That has been clarified by the income tax department. Whatever amount you are paying as LIC premium, life insurance premium, you should claim the amount inclusive of GST, right? Now after that comes your children's education fee, your children's tuition fees. Now if you have kids and for them you are incurring some tuition fees, let's say they are going to school and you are paying the school fees yearly basis or monthly basis, whatever it may be, and that amount, whatever amount you are paying, that amount qualifies for a deduction under ATC. So if you are having children and you are providing for their education, then most definitely you can take your children's education fees as eligible expenditure, eligible tax saving expenditure under ATC. Furthermore, if you have taken a home loan, then the principal component of that home loan can be claimed under ATC. Now we all know that interest component usually comes under section 24, that is categorized as loss from house property, but the principal amount is also deductible under ATC. Only stipulation for this is the amount should be borrowed from a banking institute. If you have borrowed a certain sum from a banking institute for your home loan, then most definitely you can claim the principal amount. Moving on to what other expenses, what other investment can be covered under ATC. So one thing that comes into picture, that is your pension plan. So if you have taken a pension plan, then most definitely pension, whatever amount you are paying to keep that pension plan in force, will be regarded as your ATC, eligible ATC investment. Now, apart from that, your employee's contribution, that is your own contribution to national pension scheme as introduced by the government, you can claim that amount, whatever amount you have inputted in NPS, that amount also comes under ATC. Your employer contribution, if your employer is making a contribution to NPS, then that amount is also considered. However, employer contribution comes under a different section, and monetary limit is also different for this tax saving investment. For employer's contribution to NPS, the maximum amount that can be claimed is 10% of your salary, or whatever the amount they have invested in. So in this context, it's pertinent to remember salary means your salary, your basic salary plus your dearness allowance if you are given any. Now if you are not getting any dearness allowance, then it will be only your basic salary. So if you are investing, if your employer is investing on your behalf in NPS, then max to max 10% of your salary can be contributed and you can take the benefit of it. Furthermore, if you are investing in NPS, and this option is exclusively targeted towards people who are investing in NPS. So if you are investing in NPS, then over and above 1.5 lakh rupees limit as determined under 80C, you can take additional 50,000 rupees. So let's try to take an example, try to understand with the help of an example how this plays out, right? So first things first, let's say you have made an investment, right? You have made an investment in life insurance policy, and you are paying 1 lakh rupees as premium, right? Furthermore, you have your kid, and for the kid's education you are spending 50,000 rupees, right? So your total investment and expenditure combining together is coming to 1,50,000 rupees. So that is already touching on the ATC limit of 1.5 lakhs. Now, if you invest on your own accord in NPS, then additional 50,000 rupees or whatever amount you have invested, whichever is lower, can be claimed as a deduction under ATCCD 1B. That falls completely outside of ATC limit. So in this case, 1.5 lakh rupees ATC has been covered, and I have invested 75,000 rupees on my own account, on my own accord in NPS. So I will be getting 1.5 lakh rupees because I have invested 1 lakh rupees in LIC. I have paid 50,000 rupees for my children's education, and additionally I will be getting 50,000 rupees as deduction under ATCCD 1B. So in total, my eligible deduction will be 2 lakh rupees. Right. Moving on, what other expenses are there? What other tax saving options are available to you? Aside from this, you have ATD. ATD is for your medical insurance premium. So if you have taken a medical insurance for you, your spouse, your kids, or your parents, that amount can be claimed under ATD. Now, for your parents, for your senior citizen parents, there is an interesting proposition if they are not covered under any medical insurance, right? So if your parents are covered and if your parents are not covered under any medical insurance, then provided they are senior citizen, whatever amount you are paying for their medical expenditure, that can be claimed under ATD. Only caveat is that they should be senior citizen. Now in this context, any one of them can be senior citizen and you will be able to claim the benefit. Now this amount is limited to 50,000 rupees. So if you are paying for your parents' medical expenditure when they are not covered under medical insurance, then you can claim max to max 50,000 rupees and let's say you have your own medical insurance that covers you, your spouse and your kids, then it will be 25,000 rupees. So in total 75,000 rupees you can claim, right? Moving on, what other expenditure that is covered under ATD? Second thing is your ATDD, right? That is medical treatment for handicapped dependent. So if some person is dependent upon you and that person happens to be a physically handicapped person, then you can claim a blanket deduction of 75,000 rupees or 1,25,000 rupees depending upon their disability percentage. So if that person, that dependent person is having a disability of 40% or more, then it will be 75,000 rupees blanket, and if that person has a disability of 80% or more, then flat 1,25,000 rupees can be claimed as deduction, right? Okay. Now moving on, if someone who is dependent upon you or you, if you are diagnosed with a specified disease, then you can claim max to max 40,000 rupees or 1 lakh rupees depending upon your age or that person's age. So if the person in question is not a senior citizen, that is less than 60 years of age, 40,000 rupees is the maximum amount that can be claimed, or 1 lakh rupees in case that person is a senior citizen. Now one thing you must remember, that to claim this benefit under ATDDB, you must have a certificate from the medical practitioner. So if you ask for that person, if you ask from the medical practitioner that I need a certificate for my income taxes purpose, then he will most definitely be giving you this certificate, right? And there are certain specified diseases like cancer or Parkinson's disease. So there is a comprehensive list about which diseases are covered, right? Okay, moving on. What other options are there for you to save your taxes? So now, if you are a person who is having a excuse me, if you are having a disability, then you can claim again in the similar lines of ATDD 1,25,000 rupees or 75,000 rupees in case of specified diseases. So if the physical disability is not more than 40%, but it is not categorized as severe disability, then 75,000 rupees, or if it is categorized as severe disability, then 1,25,000 rupees that can be claimed. Apart from that, what other benefit can be taken by you? So sometimes we go for a higher education, very higher education, and to meet the cost of that the education, what we do is we take a education loan. Now this is a great opportunity for you if you have taken a education loan to claim in your tax return. So in all the other deductions there is a limit specified, but for interest on education loan there is no limit specified. So you can effectively pay up to 10 lakh rupees or 15 lakh rupees, and you can as interest, and you can take the entire sum of money as your deduction from your taxable income, right? So these are the options that is available to you in case you want to save some taxes. Now if we all are in a better position to understand what are the expenses, what are the investment that is eligible for giving me a tax benefit, and you can take the prudent decision whether to go with or how to go about it, right? Now at this point of time we are going to look at the reasons for your claim being rejected by your payroll team, right? So sometimes what happens, your payroll team gives you this opportunity to invest, submit the proof of your investment, tax saving investment within a time period, right? And you submit all the information, you submit all the related documents that you have in your hand, still they get rejected and you end up pay a substantial amount of money as taxes through your payroll. Obviously, at this point of time we don't really want that to happen, so we are going to look what are the reasons that results in your proof submission, your submitted proof being rejected, right? So first point is declare your investment proof within the time period your payroll team, your HR team has mentioned. So usually in organization they give you somewhere around 1 week or 10 days time frame within which you must submit your declaration, you must submit your documentary proof. If you miss that window, then obviously they are not going to admit you to submit all the information all over again. So always before submitting the proof, keep a mental note of when the declaration window is open and when can you submit. Usually the payroll team circulates an email or some sort of communication with every one of their employees, giving them the timeline that during this period you must submit your investment proof, right? So always try to submit all the investment proof within that time period. Second point is you should declare all the documents that pertains to specific financial year. Now we are in the middle of financial year 2020-21, right? So the payroll team, they are going to consider all the investment proof that has been made in the financial year 2020-21. If you give them a proof for financial year 19-20, obviously they are not going to entertain that claim. So be very mindful which financial year you are submitting all the documents for, right? So usually in all the documents they will mention the financial year, for which financial year it is given, this document, this receipt, this premium receipt, whatever the situation may be, is being given out for, right? So you should always take a look at the date. It's very easy to forget, it is very easy to forget about which financial year you are submitting the proof of, because there is a great confusion goes on regarding to financial year and assessment year. So usually before submitting the proof, check the date of that submission, right? Second thing and final thing, the most important thing, check what is required from you, right? Because many of the organization has their different set of rules, different set of policies, which can be accepted as proof, right? Now let's say you are claiming your HRA, right? You are claiming your HRA, and for that purpose they need some sort of documentation. Now at the beginning of the year, to calculate your taxes, they will ask you, your payroll team usually ask you, what is the amount of rent that you are paying per month, right? So you declare that amount, and at the end of the year, let's say in the month of January or February, they ask you the proof for it, right? So usually what they do is, some organization ask for pay slips, the rent receipt, some organization ask for the rental agreement. Now you have to be very careful what is required from you. If they are asking for rent receipt, you should not submit your rental agreement. If they are asking for rental agreement, you should not submit your rent receipts, because if you are not submitting the documents that is required from you, then obviously they are going to reject it. So be very careful, read the fine lines, what documents are required from you to get this claim passed through, and those documents will be accepted by your payroll. Let's take another example. So if you are claiming LTA, right? If you are claiming LTA, obviously in this year LTA takes a little less precedence, but in the future years, if you are submitting the proofs, then it should be helping you out quite a bit. So let's say you are submitting your LTA proof, right? So some of the organization, they usually ask for the plane tickets, but some other organization, they along with the plane tickets, they ask you the boarding passes. Now there has been many cases whenever you have submitted the plane tickets, it's absolutely fine, but just because you have not submitted your boarding passes, the claim gets rejected. So be very careful about what document is required from you and what document you are submitting, right? If you are not submitting the document as required by them, then obviously your claim is going to be rejected, right? Now, having understood what is the reason usually your claim gets rejected, your investment proof gets rejected, now let's go to what when you should declare your investment, right? So in this year, actually in the month of March, finance minister Ms. Sitaraman actually addressed the nation, stating that the investment proof, because of the situation that's been going on, many people are not able to make the last moment investment, tax saving investment for the year. So they have allowed a wider part for you to invest the money into appropriate funds, appropriate instruments, right? Now, in this case, many people have some sort of investment going at the beginning of the financial year. Now they have this option to declare this investment in the financial year 1920 or financial year 2021. Now we are going to understand whether to go with the investment in 1920 or 2021. Usually, as a rule of thumb, you can invest your investment that you have made from 1st of April 2020 to 31st of July 2020 either in financial year 1920 or in financial year 2021. However, once you claim that expenditure, once you claim that investment in financial year 1920, you will not be eligible to claim that again in financial year 2021. So be very mindful that if you declare that investment in 1920, you would not be able to claim it again in 2021. One factor can play a big part, that is your unused ATC or ATD limit, right? So if your ATC limit has not been exhausted in financial year 1920, then you have this option to declare that amount in 1920, right? So in 2021 you always have the option to invest more so that you can save the taxes, right? So let's say in 1920, for the financial year 1920, your investment has not been exhausted. It is coming to 1,20,000 rupees. Now, in the year 2021, in the month of June or in the month of May, rather, you have made a investment in LIC. You have taken a LIC premium, right? Now, that amount, let's say it is for 30,000 rupees. Now, if you declare that 30,000 rupees in 1920, then your ATC limit is fully exhausted. You are getting the maximum tax benefit, right? Now, in the year 2021, if you come to some windfall of money, let's say you've got a performance bonus or something like that, or some other sources of money comes to you because of you may have landed a new job, for that you have gotten a substantial raise. So in that case, what you can do is you can invest in some mutual funds, like let's say ELSS fund, that can give you tax benefit and claim one time investment. You have made a one time investment, let's say again 30,000 rupees or 40,000 rupees. So that amount you can claim in 2021 itself. So if you have not exhausted your ATC in 1920 fully, then you can with a proper bit of tax planning claim the amount that was already invested in 2021 in 1920 and take the maximum tax benefit. So this can give you a certain comfort in getting a little bit of money in terms of less tax payment, right? But one thing you should remember, that if you are claiming this expenditure, if you are claiming this tax saving investment, you need to declare this amount in a separate section of the income tax return, right? So they will ask you what is the amount that you have invested during this time period. It's a very simple schedule in income tax return. All you have to do is fill in couple of numbers and you are good to go. But you must be very careful while choosing whether to go in 1920 or 2021. Right. Moving on. This actually concludes our discussion for the tax saving instrument and the ways you can save the taxes and whether to declare your investment in 1920 or 2021. Now we are going to look upon how you can file your tax return using ClearTax portal, and after that we are going to have a little bit of question and answer session, and yeah, that will be the end of it. Right, let me just switch over to the ClearTax website. Right. So once you type in the ClearTax portal address, it will take you straight to this page. Now on this page, it is very simple enough. It is asking you to upload your form 16 that you can easily do. Just click on this button. Now it takes you to the page where you need to upload your form 16. So what you can do is you can simply select it or drag and drop it. Now I'm going to just drag and drop it. Password protected, so great. So as you can see, the form 16 has been read successfully, and it is asking me to e-file the tax return. So now, after doing that, there will be a page where you are required to fill in your details, your basic details, right? So in this case, you can see the details need to be there: your first name, your last name, gender, date of birth, PAN number, father's name, etc., etc. Other than that, you need to fill in your address over here. It's pretty much simple. You can put in your address and your phone number. After doing that, it will take you to the next page where you need to declare your income, right? So in here you can see after uploading the form 16, all the relevant details has been uploaded properly and accurately. So that's done. After doing that, whatever interest, savings bank interest you may have earned, you need to input the details over here. Let's say you have made an investment, or you have got earning from your savings bank account 7,000 rupees. So I'm just putting in the 7,000 rupees figure, and you have, let's say, have earned say FD interest, let's say 25,000 rupees, 30,000 rupees. Let's take an example. Just put the figures over here and it's done. If you have received any other income, let's say you have received some sort of gift from any other person, just put the figure over here. If you have received some sort of dividend from domestic companies, just put the amount over here. This is exempt income because that is not taxable in the financial year 1920. From 2020 onwards, 2021 onwards, it will obviously be taxed in your hand. So this section will be irrelevant in the next year onwards. Now, if you have earned PP interest on provident fund, you need to input that amount over here and save it. Right? Now, if you have some sort of home loan, right? If you have some sort of home loan, then you can put the figures over here. Obviously for self-occupied house property, the details are the required details are a little bit different than the let out house property. So if it is a self occupied house property for which you have taken a loan, you need to put the interest amount over here, and you need to input the address of the self occupied house property over here. Otherwise it will not be taken, right? It will throw you an error, right? Now going to other sources. So if you have missed the opportunity to declare your total income, your total at the time of computing your total income, that amount of ATC investment, ATD investment, everything, then we have this option to include all the details. You have the option to input all the details over here so that you can claim the entire sum of money. Just put the figures over here. See, for savings bank account interest, if you have earned it and it is less than 10,000 rupees, it is given to you as deduction under a TTTA, and if you have filled up correctly, the amount will flow automatically over here and you need to save it, right? After saving the figures, if you have medical insurance, amount will be reflected over here, and apart from that, if you have any other medical insurance, then obviously you can put the amount over here. Now for your parents, remember I have told you, for your parents who are senior citizens, you can claim the medical expenditure for them. So once you select the appropriate age for your parents, the medical expenditure tab opens up, and if they are not covered under any medical insurance, then you can claim the medical expenditure that is incurred by you, right? After checking all the details from here, I can go to the final page, final landing page, where it will show me the entire details that I have inputted there. It is being reflected over here, and the end result of the entire thing is coming to 16,000 rupees of refund. If you are happy with it, just click proceed to e-filing and your tax return will be filed. Now your tax return is compared, the XML that is generated is compared with the income tax department issued software. So there is a very negligible chance of you getting an error. It is as foolproof as possible at this moment of time, even though I would urge you to double check the details that you have inputted, because at the end of the day we are all humans and we may or may not be able to input the details correctly or not. So I would suggest you, after putting all the details, just go over the details. You have the option to download a tax report from here. As you can see, there is this option to download your detailed tax report. You can download the details from here and check if all the details are being reflected perfectly or correctly or not. And after doing that, you will be asked to file your tax return. Just click on the button and it will be done. Now that actually concludes the demonstration of ClearTax portal. Now I will be taking up certain questions if you have in next 5 minutes, and after that the session will close. Right. Emmanuel says, can you share about the recently announced LTC tax benefit? Well, Emmanuel, the details that has been shared for LTC, that has been, see, for LTC components, for non-government employee, I believe you are a non-government employee and you are talking from that angle. If you are non-government employee, then to get the exempted LTA figure, you need two figures, right? Two amounts. Number one, you need your eligible LTA figure, what is already embedded in your salary, And second thing is your actual travel expenditure. Now the government has declared, or rather given us the amount for the deemed LTA fare, right? So this amount is varied from organization to organization. So let's say 36,000 rupees, right? So if instead of 36,000 rupees, right, the traveling expenditure of 36,000 rupees, you need to spend 3 times of that figure for eligible goods. Now the eligible goods in this context means a good for which you have paid a GST amount of 12% or more. Now GST amount in this context means CGST and SGST combined, right? So if you have purchased a goods which has costed you 3 times the specified amount, that is 36,000 rupees per person, then you can claim the LTA fare of 36,000. Now this LTA fare will be compared against your LTA that is embedded in your salary, and whichever amount is lower will be given you as tax exemption. Padmanabhan, you have filed your your income tax return from ClearTax. Yes, you should e-verify your tax return. If you are talking about e-verification, then yes, you need to do your e-verification through net banking or Aadhaar OTP. And if you want to be sure whether your return has been filed correctly or not, then obviously you can go to income tax department portal, download that PDF copy of the tax return and compare. I believe you will be very happy because the details in ClearTax portal and income tax return that has been filed usually remains the same. There is no discrepancy in this context. Well, Emmanuel, again, usually the motor vehicle carries more than 12% of GST. So if you are making any purchase whatsoever paying GST of more than 12%, then yes, it can be considered as a deemed LTA benefit. It can be considered under deemed LTA benefit. Devashish, it usually takes 2 to 3 months of time to give you your refund after your return has been processed. So there is a 3-step process. First, you need to file your tax return. Second, you need to e-verify your tax return, and third, the department needs to process your tax return. So if you have e-verified your tax return, the ball is in department's court. They are required to process your tax return, and after processing it will take usually 2 to 3 months to release your refund. Alright guys, so I think that's the time we have for today. It's been great addressing you and taking all the queries, addressing them and trying to make your financial life as simple as possible. And I really thank you for joining with us, and thank you very much, and happy Diwali in advance. Bye bye, take care.